started selling the enterprise product on day one, we actually already had 1 million users. HBO needed our platform to help them launch a little show called Game of Thrones. We're able to go from a business that was doing about under 100K to just a year later at 1 million in AR. Hasn't even raised a seed round yet. Product market fit doesn't feel like pushing a product in the hands of customers. It feels more like the customer pulling the product from you. It's much harder to sell productivity, much easier to sell money. If you're doing something bad and using automation, you're just kind of doing something bad at scale.
Today, we get to speak to Bocar Dia. Bocar was the first salesperson at Hootsuite, a product which at the time had over 1 million users, but no revenue. It was his job to convert these free users into paying customers. And he did a phenomenal job because by the time he left, they had over $150 million in revenue. Bocar is now a sales coach at Harvard Business School and a general partner at Forum Ventures, where his particular expertise lies in pre-seed and seed stage companies and their go-to-market strategy. It's a great episode. Let's get stuck in. But just before we do, let me introduce this week's sponsor of the OpenVC Podcast, Intercom.com. Intercom help founders by making your customer service 24/7. Through their use of innovative AI, you can answer 50% of your customer needs instantly. Intercom is offering 1 year free if you use the code OpenVC, all in caps, at the checkout using the link in the description below. And let's get back to the episode. Hi Bocar, it's an absolute pleasure to have you on the podcast today. You've been an operator, now you're an investor. Forum, take me back to your operating career where you're at Hootsuite and you were there on the first day. You then grew the team to over 150 million in annual sales.
Let me take you back to 2010. At the time, a lot of people still believed that social media was a fad. So you had to educate people on the possibility of social media before actually selling them a solution that would help them manage it. I was part of the early team. I saw us grow to 150 million. I was one of the early salespeople and sales leaders. My focus was mostly on new products, new markets, new verticals. My first sale was actually with a company that a lot of you are going to be familiar with called HBO at the time. In a nascent category, I think you're seeing that a little bit with Gen AI today. What you kind of have to do is first educate people on what's possible with this new solution or category. 2, help them build a business case internally for something that by definition, if it's a nascent category, doesn't actually have a budget. And then you have to get internal buying committees to agree on spending enterprise level budgets. And in my experience, it's very hard to go from 1 to 3. So it's much easier in the early phase to find people that are already educated on the possibilities. And I think one of the smart things that Ryan Holmes, our CEO, did at the time was that we actually had a PLG model before people started talking about PLG. It was freemium at the time. But by the time we started selling the enterprise product on day one, we already had 1 million users on the platform, using the platform on a daily basis. And you could see who is engaged. You could see which accounts were actually adding users. So that was very interesting because what that allowed us to do was that instead of trying to go out and find users that we need to educate on the possibilities of social media, we're able to just kind of look at our user base and identify the accounts that we wanted to target. That's how we found one of the smartest marketing executives out there. Her name is Sabrina Kalori. She was at the time a director of social media at HBO, and they needed our platform to help them launch a little show called Game of Thrones. But I remember at the time thinking, what is this niche nerd fantasy book that these guys are building a show around? But fast forward to today, and the success of the show speaks for itself.
What an impressive brand to convert straight away as well. So for the audience that aren't too familiar with Hootsuite, what kind of value were you providing to HBO at the time?
When you think about social media as a category, it is a different medium. And you need to really have a solution that enables you as an organization to manage those social media assets and be able to really report back on things. And you need the right permissions. You need to have the right people having access to the right accounts. You need to have the right approval workflows. So what we did, we were provided the infrastructure that enabled marketers to really leverage social media as a medium so they could reach out to their audience, get the insights that they needed, and eventually really just kind of broadcast some of the things that they needed to broadcast in a very impactful way.
They were already onboarded. You could see that they were using the product quite heavily.
Yeah.
Was it as simple as taking candy from a baby? That you knew they wanted the service and then it was already providing value? Or was that first sale actually quite tough?
So you would imagine that if somebody's been using a product for free and you have to call them up to ask them to pay tens of thousands of dollars, that conversation is a bit of a tough one to have, right? I'm actually glad that was my first sales job because that was the hardest thing to do. But here's what I say. It goes back to what I was saying about really targeting the right users. Sabrina and team really understood that ultimately we're building a platform and we're providing value in a way that you couldn't really find anywhere else because at the time what we're doing was actually quite innovative. So they understood that we're an early stage company, we had to make money somehow, and the conversation was actually more about the impact of the solution on the actual launch of the show, as opposed to talking about features and other things. So they had specific targets when it came to how they're launching the show initially. They wanted to really build that community of early fans of Game of Thrones, really get them engaged, get them talking about the stories there before they actually kind of started advertising the show and going out there to find additional folks to reach out to. So they had a whole plan. We spent a lot of time doing was really just kind of understand what the plan was, how we could help them execute on that plan, how we could help make sure that they had the metrics that they needed in order to ensure that they're delivering on some of their KPIs. And ultimately, that's kind of how we built the business case internally. But I have to say, really what you're looking for is somebody who's pulling the product as opposed to somebody that you're pushing the product to. And that's where you hear about those early kind of innovators when you're selling a product in the early stages. Those are really the type of people that you need. And so it was a bit of an exercise of finding a needle in a haystack because we each has lists of accounts that we could go after based on how many users they had on the platform. But you had to go past the features conversation and really understand what they're trying to accomplish internally.
That makes a lot of sense. How do things evolve? Because day one, there's so much uncertainty, and you guys managed to build a phenomenal growth engine in a very short space of time. Were there any best practices that you took away that were slightly unconventional that resonate with you today?
I think one of the biggest misconceptions about Hootsuite at the time was that it was a prosumer product. It's a product that a user would use, and maybe there's a pro version of the product that you can use, and that's kind of what the company was known for. So people saw the dashboard and they saw that they could sign up for free, but ultimately if you took $100 million revenue slice of the business. And by the way, we got there in just over 5 years, which was no easy feat at the time. But if you look at that $100 million slice, the revenue would actually break down into about 30-ish million of that was that prosumer product. So users that would come in, use the platform and upgrade for their individual usage. But then the 70%, the 70 million or so was kind of split evenly between renewal revenue and net new revenue, but all enterprise. I would attribute the rapid growth to that healthy mix of revenue, because when you kind of think about that model, that means that about 65 million is actually pretty predictable. And you're focusing on that net new 30 million that you need to kind of produce that year, right? When you think of it that way. On the product side, Ryan wanted to ensure that we were maniacally focused on building the best product for users and growing the free user base, which I think was actually pretty smart at the time. I think we got to about 16 million business users that actually registered on the platform. Now, that ensures that you have a solution that people are familiar with. And a product that's actually battle tested at scale, and a product that gets the collective feedback of users that are on the front line, which meant that we often built innovative features faster than the competition because our users were asking for them. So that's kind of one. Two, I would say, is on the GTM side of things, because we're able to leverage our user base to get the signals, because ultimately you could see, as an example, that there's dozens of individuals on the marketing team at Nike using our product. So what do? We reach out to those users, understand how they're using the product, but really what we're trying to do is get a picture of what the actual initiatives are internally, what sort of KPIs are tied to those initiatives, and what they're actually trying to accomplish. So by the time we got to the buyers and the decision makers, we knew so much about those companies that it was a very different conversation that they would have had with another vendor. And it's much, much easier for them to adopt a solution that they're already familiar with than a new platform. So that was very smart when you think about kind of that early stage PLG motion. But I'll touch on the last thing. As we expanded into new verticals and products, and this is actually where I led the charge a lot, we were able to really find new verticals that we can kind of go and sell into. So as an example, we started seeing in our user base that there's a lot higher education institutions using our product, a lot more banks and financial services organizations using our product, federal and state governments using our product. But when you went to talk to them, what you realize is that there are some needs around security, around compliance, and other aspects that were not offered through the platforms. We ended up really catering to those verticals. So I built each of those teams, and in some instances we needed to rethink the product a little bit. So for example, for financial services, we had to really figure out the compliance angle of things, and we ended up partnering with Proofpoint, one of the public companies out there focused on this. But ultimately, every single time you do this, you really kind of have to go back to the drawing board in terms of product market fit, at least as a framework. I often have to remind founders that there's 3 words in product market fit, and market is one of them. So every time you're going after a new market, you really have to think about, that fit again. And we did that very systematically by having teams that were focused on really established markets that we knew how to sell to already. But I kind of led the teams that were selling into verticals that we didn't actually sell into before. And using that approach, we're able to land 6-7 figure deals with governments and other institutions. But it's really a multi-pronged approach where we basically have the product really helping surface signals, but then you actually have to layer an enterprise motion on top of that.
If I was to pull a common thread out, you're really taking the time to listen to your customers. You're really trying to position yourself as an ally to help them achieve their objectives. And that takes you back to day one and what did the customer need from us, rather than trying to shoehorn your product into their scenario and their specific case, exactly. Which is quite hard to do because there's going to be a lot of conflicting answers to questions when you pose them to customers, which ultimately resulted in you segmenting these new products into different sectors. Is there anything you learned about what to listen to and potentially what to ignore when it comes to customer research?
Customers are actually very good at really sharing what their problems are with you. Because these are things that when they're acute problems, they experience on a day-to-day basis and so on. Right? But there's 2 things that I think are a little bit more on the sales side or on the vendor side. One is that you can let the customer tell you about their problems, but don't let them tell you about the solution. That's your job. Because ultimately you're building a product, and really what you're looking for is that one repeatable kind of use case study that you can build a product around. And it's not an individual customer thing. It's about finding that one repeatable case study that you can then replicate across the board. So that's, I think, pretty critical, and I have to remind founders of that all the time, because a lot of times what you ask sometimes is that magic wand product question. Like, I had a magic wand and could solve this, what would that solution look like? And they listen to it and immediately implement it. You're the product person, not the customer. Think of the best solution for that problem. And the other thing that I would say also is that customers are very good at telling you about their problems, but they're not, in my experience, very good at or really quantifying the impact of that problem for their organization. Remember that ultimately somebody is going to ask for a business case or ask for the dreaded 3 words ROI. And ultimately you have to be really laser focused, not on the features and the things, but one of the things that we really guide our founders towards is thinking about identifying the specific value props that they believe they can help with. And in my experience, when it comes to enterprise, and by the way, maybe for the listeners out there, caveat, we invest mostly and work mostly with B2B focused companies. So a lot of what I'm saying is kind of more applicable to B2B, but I think I'm pretty general in how you can think about it. But ultimately, there's really only 4 value props in terms of categories in my mind. It's you're helping them make money, you're helping them save money, you're helping them mitigate some type of risk, so think compliance or that type of risk, or you're really helping dramatically improve a process. So that's where you can help speed something 10x, or maybe you can help make a process with a much better experience. But it has to be a very dramatic difference. And by the way, I'm listing these in order when you think about it, because if you can show somebody that you can make them make money or help them make money, they're more likely to buy from you. It's just one of the realities. It's much harder to sell productivity, much easier to sell money.
That is definitely a critical and key bit of advice. Let's just link this up a bit. So you witnessed phenomenal growth at Hootsuite. You're leading new products, you're opening new market segments, and now you find yourself at Forum Ventures, which has just celebrated its 10th year. You've got over 450 portfolio companies. You have a combination of an accelerator program that has 90 companies now joining every year, and a pre-seed seed fund that invests in 20 companies. You guys are absolutely killing it right now in the investing space. How did you find that transition? What kind of pushed you into the venture capital side of things away from product-led growth?
So interestingly, if you had asked me actually early in my career where like the trajectory that I kind of wanted to follow, I would have probably still answered that I wanted to get into venture capital at some point. Right? I knew that very early. That said, I wanted to learn enough to be able to be helpful to founders. I wanted to kind of do a few tours of duty. So spent 7 years at Hootsuite and doing a lot of what I just kind of talked about. I was mostly focused on that kind of 0 to 1 to $10 million ARR phase for the new verticals that we kind of had. My last gig was a little different. I moved to Toronto, where I basically led the East Coast business, and I had to kind of staff that office to 100 plus people. Then I wanted to be a founder, so I was in the founder shoes, really working on a sales tech company at the time, which was, when I think about it, manager, co-pilot before its time. Right? Forum actually invested in my company at the time, which is how I got to know the team pretty intimately. I was an LP in the fund as well, so long history there. I was an operator again after that, but really I think the hardest, what I really wanted to do was be able to help founders in that really formative phase, which is kind of that 0 to 1 phase, which my time at Hootsuite taught me that it was a very, very different beast than what you actually do when you're selling after you've established product market fit and you have a brand and you know what you're doing. The 0 to 1 phase is actually very different, and I can touch on that a little bit later. What attracted me to Forum is that we're very hands-on, and I didn't want a role where I was just an investor day in, day out. I actually spent about 70% of my time almost acting as a fractional sales or go-to-market leader to founders in the portfolio. So rolling up my sleeves and working with them to help them close deals, figure out how to get to the right revenue traction and metrics that help them kind of get to that next phase. And really that's what I love about what I do. In a way, I found a way to still be an operator while being an investor. Obviously, things are different. When I was a sales leader, it was very different because, you've got a quota and you live on this quarterly schedule or where you have to hit the number and everything kind of goes back to you. When you're an investor, it's a little different because as much as you can provide advice to the founders, you can't actually tell them what to do always. It's their company at the end of the day. And the other thing too is that unlike sales, like it's delayed gratification. You don't know how an investment sometimes is going to perform until, the company has been around for 5-10 years. So very different world, but I'm very much still in the operator space there.
So you're able to play to your strengths and actually deliver a lot of value to the portfolio companies. Having someone that's been there and done it and actually taking an active daily interest in your startup is very different to some hands-off approaches that some VC funds employ. Are you able to talk to any of the largest outliers, any of the biggest successes that Forum's actually had so far?
Let's just say that most of them are well above 3 to 4x for the most part because we're invested in companies such as Fireflies as an example. We have companies such as Root Automation that just raised our Series B based out of New York. And I could rattle a bunch of other companies that we've got in the portfolio, but we've made 500 investments.
It's been definitely posting some phenomenal numbers as a VC fund there. What do you see most people getting wrong at the earlier stages when it comes to sales?
Yeah.
What kind of things?
We tend to attract a lot of folks that are senior operators but have experienced a particular problem in a space that they were in before. Unpopular opinion, I think founders that don't have a sales background are actually more well suited to selling in the 0 to 1 phase. I find that when you have sales jobs, what you don't realize is that you are persuading customers to work with you. Whereas really what you're trying to do in the early phase is that you're trying to validate that you're working on a problem that a lot of other customers experience in a way that actually could be venture scale as well. Product market fit doesn't actually feel like pushing a product in the hands of customers. It feels more like the customer pulling the product from you. So the first mistake I'd say that non-technical people make is that they don't think they know how to do the selling bit, which I actually think that they're the most well suited to do. But the actual biggest mistake that I see early stage founders make in this early stage kind of sales process is that they approach the process as though they're selling a product, where they really should be approaching the product as though they're selling a service. And here's what I mean by that. Last week, as an example, one of the companies that we're in diligence with is a company that's in the RCM space in healthcare, revenue cycle management. Think of it as kind of a platform that handles some of the back-end financials of a lot of these hospitals and hospital systems. And the founders come from one of the leading RCM companies out there. They identify gaps in the markets and are building basically an AI native platform to help address that. And in the conversation with them, one of the challenges that they highlighted was that they struggle to sell to these healthcare organizations because they're a team of two, and they keep getting asked all of these things from a security standpoint, certification, and all of those things because they're trying to sell a design partnership to these guys. Now, healthcare organizations don't actually understand that term, design partner. I think sometimes we forget that some of the things that are obvious to us may not be terms that even some of those customers talk about. So one of the things that I asked them to actually test out was, instead of going to these customers and trying to and talking to them in a language they don't understand, here's the one thing that some of those healthcare organizations do all the time is that when I asked them how they currently address the problem, the answer was that they hire contractors, so outside help, to address that problem. And I thought, why don't you tell them you used to work at the leading RCM company, you know this space very well, you know the platform like the back of your hands. Why wouldn't you just hire me or us, the founding team, to help address this issue for you and see what they say? A week later, they reached out saying, these guys are now open to the conversation. And here's the thing that you don't realize when you're doing this is that these organizations hire contractors all the time. And if you're hiring a contractor, it's a very different procurement path than if you're trying to adopt a new solution. And remember, the customer doesn't actually care about your solution. They actually care about the problem being solved. Right? Mm-hmm. And from a venture standpoint, by the way, for founders that are listening to this, what I actually want validated is that you're working on a problem that's important and acute enough that the customer is willing to pay you money to solve it. Meaning that even if you did it as a service, but as part of that service, you're building a solution to actually help deliver on the problem, I don't actually care in the early stage whether that's recurring revenue or not. What I actually want to validate is that you're working on something real. So very different kind of mindset, because you wouldn't do that if you had an established product, because the way you think you sell a product is that it's already built in a certain way and you basically buy the product before you get the value as a customer. Whereas a service works the opposite way when you think about it. You have a conversation, you scope out what needs to be true, and then as soon as you deliver on the value, you get paid. And I think it's a much better way to actually validate things in the early stage than trying to do things the other way.
That's really good. Making it easy for your customer to say yes, so repositioning the messaging from I'm a design partner, which is a concept they might not understand, to becoming a contractor, something they do regularly, something they already have systems in place to facilitate. That's very much refining your marketing and actually becoming an expert at selling. And that's slightly different in my mind to product market fit when you're building product that is loved by the user so much so that you start being able to charge a very premium product. Have you got any examples of when that transition has happened to any of the portfolio companies at Forum, when they've started having customers pull them in a direction rather than push?
I'll give an example. One of our portfolio company called Doseform is a product where what they do is that they help you build a platform to help you run and manage a pharmacy with some automation and some agentic workflows. Let me even touch on one thing that was maybe a little interesting about the founder as well, and the initial kind of story where he already had a built platform, Tochi, the founder, used to actually run his own pharmacy business. And one of the things that was interesting about it, even his initial kind of marketing and how he was reaching out to customers, was that it was the typical kind of thing that you would do if you went and Googled how do you prospect and how do you reach out to customers, and applied some of the things that you apply later in the later phases rather than in the phases, right? So he was having challenges connecting with customers, and he was also having challenges really getting that pull that we're talking about. So first things first, we had to address the messaging. And here's what I see founders tend to do in the early stages is that, like I said, they'll Google and they'll have a perfectly okay message to send if you're a more established company, but it's the type of message that's not going to work if you're a small organization. So generally, they'll send messages that kind of go something like this. Do you have problem X? We're building a solution to address it. Would love to talk to you. Perfectly reasonable, right? Except when you don't have a website, or when you're a team of two, what happens is that customers go and take a look at you and right away think, these guys are early, I'm not going to take this risk, and then it's crickets, right? Remember what I said, he used to actually be an owner of this business. So he actually used to be the buyer of the solution that he's building. So we tweaked the messaging, and the messaging kind of went a little bit more something like this, where he would reach out and say, hey, I've been running, I used to own my own pharmacy, and here are some of the challenges that I encountered at the time, which prompted me to really want to build this platform. I don't have the experience of running a regional chain pharmacy like you do, but I want to make sure that we're building a product that works, the right product for these regional chain pharmacies as well. Are you open to hopping on the phone? I've got some questions. Would love to talk to you peer-to-peer, understand a little bit more how those challenges kind of show up in your type of business. Very different message, but when you listen to that, it doesn't actually matter that you don't have a product yet. You're going to go and reach out and have the right conversation with these guys. Right? Because what you do initially is that you're seeking feedback, and you're effectively catering to or at least trying to leverage their expertise, as opposed to trying to really sell them a product. Right?
Yeah.
Now, that enabled us to really quickly home in on the actual value drivers. If I kind of go back to them, it's really showing how you can help that that pharmacy business make money, save money, mitigate the risks that are inherent to the space that they're in, and really dramatically improve their processes. And we're able to go from a business that was doing, I think, under about 100K at the time, to just a year later at $1 million in AR. Hasn't even raised a seed round yet, by the way. I think we use a lot of terminology, and I realized that I used it myself. But here's actually what it boils down to. I think the better way to think about product market fit is really to think about that one repeatable case study that you can have. And I'm saying that on purpose because a case study really shows you what the problem was, but also what the impact of the solution was. And if you're able to replicate that case study in such a way that you have customers that are really wowed by the product, I think that's the best way to attract other customers and really start creating that pull, because what really attracts customers is them understanding that you're there to help deliver on the impact that they want to see. So it goes back all the way to day one as a salesperson and the conversation with Sabrina at HBO. It was about understanding what the impact was, and as soon as there was conviction that we are aligned and helping with that impact, then a customer is going to want to work with you. Yeah. It's, wow. I know it sounds simple, but it should be simple.
It's definitely simple. So I have a question on the journey of getting there, the journey of getting to that message resonating. How many changes do you reckon like a founder should make to their marketing? Should it be every 10 outreach campaigns I do, every 10 customers I reach out to, I then change the messaging and I track it minutely? Is it something they should be changing daily, monthly? How How focused should they be on making minute changes to the messaging?
So the thing with prospecting in general and building pipeline is that generally you have to give it some time to really make sure that you've got enough of the data to give you a sense as to whether it's working or not. What I find founders do is actually that they tweak the messages too often, or they will change things if it doesn't work for maybe 20, 25 different folks that they reached out to. But the reality of the situation is that think of it as an experiment. Like when you're running an experiment, what you want to do is try it a certain way, same way every time with a given amount of time so that you actually start collecting data that kind of give you an understanding of how things are progressing. And then and only then do you decide whether to tweak it or not, right? So pointers that we give our founders is to really make sure that they're reaching out to at least 100 contacts before forming an opinion about their messaging, that they're also hitting up those contacts a minimum of 3 to 5 times, because we all know how things work these days with emails and other channels. But more importantly, I think what we do is that we really help them focus on having the right type of message for the stage that they're at. So I go back to Tochi, right? Like the messaging was a sales message, where it really should have been I'd like to connect with you peer-to-peer to get your feedback on this thing that we're building type of message. So a lot of the times, to answer your question, what I find is that founders actually tend to tweak things too much. One thing that I'd say, though, caveat, would be in the current environment of AI solutions and AI SDRs and automation at scale, I think outbound as a channel is starting to lose its luster a bit. The conversion on outbound is changing quite a bit. So we're starting to encourage our founders more and more to leverage their networks, get in front of customers, to use things such as, product-led sales that we talked about at Hootsuite as an example, ecosystem-led sales, partner-led sales, and really building, and leveraging their voice as a founder on platforms such as LinkedIn to talk about the things that they're trying to solve, to attract people to them as well. So times are a little different these days when it comes to that, but it's all about experimenting and finding the right bit for your own context.
Such tangible, valuable insights for someone that's been there in the trenches hundreds of times before. Don't change it too fast. Give it some time to work, but stay aware of what you're actually trying to get at. Stay aware of the solutions that you're selling and if they're resonating with the customer. So sticking on the theme of changing, what are some of the most innovative go-to-market strategies that you've seen? 500 investments.
So I'm actually going to take the other side of that. Here's what I'll say. Remember, we're focused mostly on on early stage. So really what we're trying to do is help companies get to their first kind of 3 to 5 enterprise customers that are paying them. Okay. Then get to the 30 so that they can be at maybe that $2.5 million AR so that they can go out and raise a Series A as an example. I'm talking about 10, 30 customers, right? Here's one of my biggest pet peeves, actually, speaking of innovation in the early stage. I actually think that founders shouldn't really try to innovate too much with go-to-market in the early stage, or innovate at all. I'll talk to founders sometimes that will, at the very early stage, no customers yet, but they're using solutions such as, X, Clay, trying to reach out to folks at scale. And guess what? If you're doing something bad and using automation, you're just kind of doing something bad at scale. So what I actually try to do is get founders to really focus on the basics. Don't even think about target market. Don't even think about target segment. Think about that target person that you think you want to build a case study for, if you think about it that way, and really go and find that one repeatable use case that you can focus on. So one of our Portco companies, as an example, called Psycho, is a company that enables you to manage and really kind of maintain your APIs and have the right documentation for it. They're leveraging AI for it. And when you think about the number of APIs out there, there's a ton of companies with APIs, so a ton of potential customers that they could have. Yeah. So initially the conversation was in around the ICP and who they should target, and it was a very kind of broad definition of who they could reach out to. It's like folks that have an API. I'm like, okay, well, you have to really kind of drill in there and understand who exactly you're thinking about. Okay, so this is the type of stacks that you might want to have, and we really went all the way to figuring out, okay, maybe it would be best to start targeting organizations that don't just have APIs, but organizations that are in verticals that are a little bit more challenging from a regulatory standpoint, and where they had to have a certain approach to the data and the APIs that they currently had, which kind of led us towards financial services. But we went even a level below that and identify specific types of stacks and specific type of engineering leaders that had people issues internally, which led us to really selling some of the first enterprise contracts. So it's about really thinking about, I think we sometimes get fancy, and it goes back to like the innovative thing. We think about all these like really fancy market research things that we could do. We build different personas that are just kind of these fictitious people, right? Ultimately, I think I want to urge folks to think more about just who's that target buyer user, like name them. Ideally, you have a person that was your first customer and you're trying to find that person again with the same use case and the same problem. And that's kind of how I think you should really go about landing that. First off, just kind of think of milestones as well. Like, don't focus on just a number. Focus on just simple milestones, such as you want to land your first paying customer. That's your goal. Once you land that first paying customer, you want to find that same repeatable use case with 3 to 5 of them. That's the next goal. Once you are able to not just find that use case and you're able to really solve it in such a way that customers are delighted or getting an impact, then you can start maybe inching towards, okay, let's go and find others. Let's go find our first 10, then our first 30. Don't do this thing where you're trying to just put together this overall high-level plan that actually that's so high level that it's not actually connected to the reality of the ground, because then you just end up floundering for a while as a founder, thinking that you're doing something wrong, but really you're just not focused enough.
I think this is more practical advice than most investors tend to give, because if you're a VC, you're not interested in products that aren't scalable. Like, you need to see 10x potential. You almost need to found it. A lot of people need to see total addressable market size of multi-billions of dollars. And going from the first customer, the first person, all the way up to a multi-billion-dollar company, you normally can't map it out. Like, the first idea is rarely the final idea that scales. It's playing in an exciting space and getting it really right that ends up becoming a rocket ship.
Quickly, I think there's 2 things that you're doing though at the early stage, and this is actually something founders don't always kind of think about. You are trying to validate that you're solving a real problem with a customer in such a way that, it's acute enough that they're willing to pay you money for it, right? So you're validating that you're working on something real. But what I find that founders forget to do sometimes is to validate that there's enough customers that experience that pain point to actually justify your venture deal outcome. Now, I'm not saying that if the initial kind of use case is not a venture scale kind of web, then scrap it. There's ways to build multi-product, market companies just like we did at Hootsuite, but you kind of have to know that, because in your pitch you're going to have to convince investors that you're there to build a business that's going to be generating hundreds of millions of dollars, and generally you actually have to validate that before you go out and even raise a seed round, as an example. If you're not, like, the first thing that investors, the 2 first things is the founder, of course, but the market itself, you won't believe what percentage of pitches we turn down, mostly because the market story is not there.
That's really, really interesting. Have you seen any large pivots? Any companies that thought they were going after one particular type of customer, and then actually through more research, through a bit more time in the market, have found that actually they should be selling to someone completely different?
Harrison, that's kind of a daily occurrence for us. Like, we're in the early phase, and sometimes we'll work with founders or at the ideation stage. So here's what I would say. You ultimately want to have this experimental approach as you're looking for that right fit in terms of the problem. And the way to kind of think about it is that you've got a few different experiments that you're running. If I think about go-to-market and building a playbook as a founder, it really kind of boils down to 4 things. It's having a clear idea of who your customers are. Define those customers not in terms of your own thoughts in terms of what product you should build and so on, but define them in terms of kind of the 4 ways in which you can deliver value based on a pain point that they have, and more critically, how acute that problem is, because that's kind of how you're going to get to the right customers initially, because otherwise you'll run out of runway. So that's 1. Have a clear idea of who your customers are. 2 is having a predictable and repeatable way to get in front of them. Now that's going to look different based on who you're selling to. If you're selling to healthcare as an example, you'll find that you can send emails all you want, but it's going to be very hard to get in front of those guys unless you identify the right folks and the right conferences maybe that they go to so you can get in front of them. So it's going to be different for everybody, but what's critical is that you have a predictable and repeatable way to build that pipeline, right? Then have a repeatable process to sell them. Right? And I think what you have to focus on there is really building that one business case so that you're able to replicate it with additional customers, because really I think the better definition of product market fit is really just having that repeatable business case, right? And finally, having a repeatable process to deliver value to them. Because if you think about it, if you have a clear idea of who your customers are, you have a predictable way to build pipeline, you have a predictable way to close pipeline, and you know how to deliver value to them, what else do you need? Because then you can go and find other customers and basically do the same thing. But
The flywheel starts.
How I think about things.
I think for my final question, I'd love to get an insight into the resilience and how you advise founders to handle bad days. What kind of things, what kind of strategies do you suggest founders and sales reps actually do to retain their sanity and stay in there for the long haul?
I think in the current environment, for most founders, what's true today is that there's more that you have to prove out in order to get that venture capital. Meaning that what used to be, a team raising was just an idea, an initial mock-up or idea or MVP was maybe some design partners, has now become a motion where VCs actually want to see customers converted into paying customers before you go out and actually even raise a round. What that means is that now more than ever, founders really stress about it's actually a much harder time to be raising that capital. But I would say it's not actually a super hard time to be building a product for different reasons. I mean, I can get into AI and some of the things that are available today. But here's what I would say to answer that. I think the best way to keep your sanity as a founder, being in those shoes, is to really make sure that you're living in two different planes. And what I mean by that is that one of the planes that you live in is kind of the short-term, kind of day-to-day, milestone-driven kind of motion. And I find that founders often think that they're in that plane, but they're not actually thinking in that plane the right way. And I'll expand on that in a sec. And the other plane is that you actually have to be thinking about the long term here as well, and the vision, and really be driven by that passion to build that company or solve that problem you're passionate about, so that you can generate hundreds of millions in revenue down the road, right? So that's kind of the cognitive dissonance a little bit. You live in the future, but you actually have to live in like the second as well. And I find that the best way to keep your sanity is to have a really clear sense as to where you're headed. So have a really strong vision, but then have really clear milestones that are immediate so that you can actually experience those small wins. Because if you don't have them, you're not going to be experiencing those small wins, or at least if you're not deliberate about it. Earlier, what I was kind of pointing at is focus on just the initial milestones. Milestone number one is just focus on getting to that first kind of pilot. Then focus on just getting to that first converted pilot. Then focus on getting to the first 3-5 paying customers, and then you move beyond that. I find that a lot of times founders forget what they're actually accomplishing along the way, and it's very easy to forget when you're in this, I don't want to go back to the founder mode meme, but we're in this founder mode, day in and day out. Just remember to really break it down into small steps, small milestones, be very pragmatic. And I think that's kind of how you keep your sanity.
I really like that. I've never heard that actually explained before, but it makes a lot of sense, because day to day, there's a lot of setbacks, there's a lot of there's a lot of rejection, there's a lot of problems that you've got to deal with. But actually being mindful of the progress over a month, over a week even, and that you're heading in the right direction gives you that resilience, gives you that confidence that actually what you're doing is right in these small setbacks. Well, look, thank you very much for your time, Bocar. I think that was one of the best episodes we've had on go-to-market and strategies and how to set up sales in the early days for startups. I really appreciate it. Thank you for coming on the podcast.
Glad to help. You can find us at forumvc.com, or I'm pretty easy to find. Hit me up on LinkedIn if you're building something cool. One question that I don't know that I answered very well.
Okay.
You might want to edit that out maybe, is the question you're asking about the successes. I just wasn't prepared to answer that one.
In the portfolio.
all your companies, but we've got 500 companies in there, so it's kind of hard to remember all the good examples. So that's the only question that I thought maybe wasn't a good answer. But aside from that, I thought it was okay. I tried to keep it conversational anyway, so I wouldn't really edit too much because I think that's kind of how things sound.
No. Yeah, I agree. I like it. I'll take that question out and the answer.
Awesome. Cool. All right.
Perfect. Thanks, Bocar. Have a great weekend, and thank you for your time.